GM, it is Wednesday, the 15th of October. Welcome to Morning Market. So, where are we seeing capital flow? Well, Bitcoin is below its Monday high. Ethereum managed to test its Monday high, but it's still below it. So, you're seeing Ethereum strength relative to Bitcoin. Stocks are above their Monday high, and gold has been above its Monday high the entire time, chatting to new all-time highs again. So capital on the buy side is flowing into gold. Gold is the strongest out of all assets here. Stocks are stronger than crypto. That is no surprise because we saw a huge crypto market liquidation, which we didn't see in stocks. That hasn't had follow through as well, which is key to note. So crypto is definitely out of favor when it comes to the long side. You're not seeing that relative strength, which is what you want to see if you are long in crypto, of course. Ethereum, stronger than Bitcoin, so seeing that altcoin outperformance, which is also interesting to note, as you probably would expect to see alts outperform as you head later into Q4. So let's see if that continues and if potentially some of this relative strength can start flipping around in crypto's favor. But that is where capital is flowing. And it tells you the picture for the day, really, because Bitcoin, we dumped into the high time frame SR. You can ignore the liquidation wick. That will just help you analyze the TA for what it is. This is where we bounced. We rallied into the H4 FVG, fully filling the gap. That's where we found resistance. We then broke down below the gap. So you had the H4, 12, and 21 EMA bands providing resistance. Dumped right back to the high time frame support resistance level that I've been sharing with you guys. That's what we saw in the last 24 hours. We bounced from that level. So since then, we've just been in chop. This is directionless. We're finding resistance at the H4 FVG again. There really was only one good trade here, and you guys took it. I saw many of you in the comments. It was this short once we closed below the Q4 open, playing it to this high time frame support resistance level. Didn't manage to get the liquidity sweep, which is quite telling of the market right now because we're getting lower highs and higher lows, which denotes a compression pattern like this and like this. That shows volatility is decreasing. And as traders, we need volatility to make money. Therefore, just because you see someone on Twitter or someone in the chats making a bunch of money, don't let that make you break your own processes and systems because that is FOMO. Stick to your processes. You don't know if they're down for the week, down for the month, or even down for the year. You don't even know if they're down for the day. Maybe it's just one winner. So while there can be temptation to trade during this boring chop because we just had a huge move, that is actually going to be your biggest pitfall right now because after such a volatile move, traders expect volatility because they become accustomed to it. But if everyone expects volatility, that actually dampens volatility. And you see this compression and chop. So until we can reclaim that Q4 open, I wouldn't be looking for any longs unless we can actually take some liquidity. And that brings me to my simpler view of Bitcoin for today. So you've got two liquidity levels. You've got the Sunday high and you've got the weekend liquidity here. If we can make our way back down to the weekend liquidity, I'll be looking for, can we sweep and does price action show signs of low time frame reversals? Then I'd look for longs. If we break it, then I'd look for momentum continuation shorts. And same with the upper liquidity level. Can we break and hold it? If so, I'll be looking for price to fill in this daily gap, which I've marked out here, goes up towards 120K. I think if we do break and hold above it, this daily gap becomes the target. If we, however, reject from that level, then again, looking for that red path to find a reversal trade back to the range low. That's going to be where I take my high time frame trades for Bitcoin, or a medium time frame trades, if you like, doing business at those extreme areas and not diddling in this nothingness directionless chop. Because as I said, currently we're rejecting those H4 12 and 21 bands again here, unable to flip them, can't even get near that Q4 open, therefore direction is going to be down. Therefore, if we take liquidity, that can give you highly probable setups. Or if we go up from here and bounce, then again, looking at those extremes to see how does price react, because that gives you the most signal. In the middle here, you don't have much signal at all. So that's really the full picture for Bitcoin. Again, I do think we can fill this daily gap in before all is said and done. And show you this chart here. So we've got 110, 115, and 120, those round number levels. You can see just how well respected these levels have been on Bitcoin. Bounced into 115, that's where we've sold off from here. So I think you've got the liquidity at the low, liquidity at the high. We'll take both of those, whether it's the upside first or the downside first. In this example, I give it with the downside first. And then from there, the target for smart money should be to fill in this daily gap. I would imagine you see volatility compress now, and once liquidity gets taken, we can see a move to that gap. Maybe it comes from later, but I think that's the overall target, even if this is distribution and we are going to see the bearish red path on BTC here, because this is how you generate exit liquidity. You fill in this gap of inefficient price action. You then fill more sell orders at a good price, and retail get excited. So they provide the volume, they provide the exit liquidity for smart money to fill their sells into. And then that's when you can see red path. You get daily closes below 110. That's an early warning. Daily closes below 107, that range low. That is confirmation of a distribution and likely leads to markdown. And of course, you got McDonald's, Pepe over there. Just a meme, but you guys are going to be better than that. I know you know how to manage your risk, trade both long and short. However, dumb money, they're going to be getting wrecked in this path. Now, green path, alternatively, start closing above 120, then you're seeing potential strength. Daily closes above 124, then potentially got a markup, and we can all buy a Lambo. So that's what I'll be looking for on Bitcoin, watching this daily gap here. Can we break above it and hold, or do we reverse from there? And is that the final lower high before the distribution confirms? Because we are range bound until these red lines break. So at the moment on Bitcoin, volatility is compressing, guys. This is a market maker's dream right now. People think market makers make a bunch of money during these cascading periods, but they actually don't, because they provide liquidity. So they have to take the other side of the trade here. They have to get long while price is going down. Whereas when price goes sideways, retail get long at the highs, short at the lows, and market makers, they provide liquidity and they can buy low, sell high, buy high, sell low. And that is how they're going to be making money here. I mean, sell high, buy low, sorry. So that is what you're wanting to avoid as a retail trader, is expecting huge moves while we're in the middle of a consolidation instead of treading around the extremes. Now, Ethereum, slightly stronger than Bitcoin. So we bounced from the impulse candle gap here. So mentioned in yesterday's video, if you see this gap fill in, that can produce a reaction. If it doesn't, that's going to be telling, and potentially you break the range low then. So that path played out pretty beautifully. However, since then, we made our way to the Sunday high, rejected, and these levels are then generally just being respected here. So ETH needs to hold this high time frame support resistance level. If it can't hold that level, then at risk of breaking down here, because we have rejected so far. So to take the simplified view of ETH as well, if for how I would be interested in trading it is again around these higher time frame liquidity levels. So get above this liquidity, which we've currently rejected from, then sure, we can look for a potential markup rally. And again, we can take the daily gap of ETH, which it has filled in here. So potentially you are seeing a reversal here. Daily gap, reach the top of it. Now we are coming down, rejecting of the daily bands over there. So you really want to get above this level and start trading above the daily gap to see further upside on ETH. Otherwise, red path, potentially see rejection here. And if we lose, as I said, that high time frame support resistance level, then you probably make your way back down. Now, ETH's been stronger than Bitcoin, so I've added an extra liquidity level here where we could potentially sweep and reverse from. And that can be in conjunction with Bitcoin hitting its respective low over here. And you see that continued Ethereum outperformance. Therefore, potential sweep and long if we get that path. Otherwise, I'd be looking at the main low over here for sweep and long if we see those low time frame reversal signals. Otherwise, break that and we're looking for further markdown. So that's what I'll be looking at when it comes to Ethereum. Obviously, ugly 4-hour candle right now. Hit that exact level and rejecting. So looks like crypto needs some more time. You're again seeing that compression on Ethereum as well, where you're making those lower highs and higher lows. So wait for the high volatility areas around these levels. That's going to be the best place to do business. Don't trade during the chop. All of this directionless price action, I'm going to be waiting for the extremes to do business because they're going to give the best reactions, and the best reactions give the best signals of where the next direction is. So that is it for the crypto market. When we look at stocks quickly, what have they been doing? So stocks have, of course, been outperforming here. They hit the full CME gap target. So mentioned to you guys in the video here, green path, if we fill in that gap, then you're potentially looking for a rally on stocks. And well, that's exactly what you saw. Filled in the CME gap, rallied, producing now new highs this morning. So stocks are actually filling in their 1 hour impulse gap here. Get above there, then potentially that's a show of strength on stocks. Reject it, then back to chop and forming what could be an overall bottom or could be continuation of the downside. But it's clearly outperforming crypto, clearly got more strength, so looks good. Targets are getting hit. And when we zoom out on stocks, this is what's going to tell the clearer picture. So remove all of this. Don't need this anymore. This year, the stock market, every time it has a sell-off, makes a new high. Sell-off makes a new high. Sell-off makes a new high. And even here, look at this. Every sell-off makes a new high. You don't see extended sell-offs where, like this, you actually start selling off, not making a new high, and then also breaking that low and continuing to sell off. So you haven't seen that yet. The question is whether this sell-off is also going to lead to a new high. So that is what you're looking for here. Mark this out in orange. Is this going to produce a new high and continue the trend? If it doesn't, that's going to be very telling. So if we actually close below this low over here, then we're seeing a change of character and probably going to get some extended downside in stocks. Remove this for now. But if we just continue making new highs, then it's more of the same. So I'd be very careful looking at this level over here to see what's going to happen next. And if we make new highs, then more of the same is going on, because these tops, they take a while to form in the stock market. Again, you constantly see the pattern in the bullish periods. You just have a sell-off, makes new highs. again, have a sell-off, makes new highs. And then eventually that stops happening over here. So we have a sell-off, doesn't lead to new highs, but it does lead to chop. It doesn't lead to straight down. So sold off, chopped around, got back to the highs, but then eventually you broke down. So could we see something like that on stocks where we instead come to the highs, just chop around for an eventual breakdown? Possibly. Alternative to that, of course, is just continuing to break out to new highs. So be keeping an eye on this. Tops take a long time to form. If it's not going to top, you just continue following the trend. And that, of course, is your risk on, risk off gauge for wider markets. So important to watch this low. As soon as we break that, that's when you're seeing stocks go into some sort of extended period of downside. Now, a lot of people are going to be calling for a 2022 style move, no doubt, on stocks over here if this chart loads. So they're going to be calling for something like this. I think unlikely. Don't have the same bearish conditions. Don't have that bearish economic backdrop that we had. We don't have soaring inflation. We don't have the Fed looking to hike rates. It's not the same. There isn't a catalyst for some sort of bear market on stocks, but maybe it's just like this, where you just have an extended retest of the previous all-time high before going back up. Potentially that's going to be on the cards, but till we break that low, expect continuation higher. Now gold, what have we seen? Well, in the video I shared with you guys, or in my analysis even, we have this impulse candle on gold on the H1. Break above it leads to continuation. Break below it leads to further breakdown. And well, when we look at the gold chart, go to the 1 hour, that played out pretty beautifully. So GM to anyone who caught this gold move with me. Lovely impulse breakout here with high volume, led to really nice continuation on the breakout setup here. Invalidation goes below the bands. That's the trend support right now. You even got then a retest of them bands, which yet to be seen if that produces a new high. Overall, very nice conditions to trade on this asset. Green path played out nicely. So this trend has the strength. Daily keeps making new all-time highs and starting to really get away from these bands now, which instead of testing them and coming back to them, we're accelerating away from them, which is indicative of periods like this, which you generally see before some sort of cool down consolidation. Whereas when you retest them, stay close to them, that's more of a healthy uptrend. It's this parabolic action over here when you just get above the bands for an extended period that tends to lead to the slowdown. So be watching closely on gold. If we do keep accelerating, it's probably going to lead to some short-term profit taking, and that can lead to some consolidation. And maybe that is the catalyst for BTC to then fill in its daily gap in that orange path. So that's what I'll be looking at in the markets. Of course, Bitcoin ETF flows, we've been seeing outflows pretty heavy. Ethereum, we've been seeing outflows even heavier. Yeah, it's outperforming, and you're now seeing inflows even heavier. So interesting dynamics in the market right now. Quick look at the data. So again, looking at these liquidity levels to do my main trading around, not trading within this chop. You're seeing that open interest is still built up quite a bit from the low here. We're up 5.86%. So a lot of positions have built on Bitcoin. Price is flat. Therefore, you're looking for these extremes to see reactions at, because that can catalyze a volatile move. Remember, guys, as compression gets tighter and tighter, volatility decreases. That eventually leads to a volatility expansion. Everyone gets bored, chopped up, wrecked right before the big move. So keep yourself active. Don't overtrade. Don't waste your bullets during this period. Watch your extremes and trade your assets accordingly. See you guys in the next one. Drop a subscribe, hit that bell on, Drop a like and comment, boost the algo if you appreciate content from a real full-time trader. GM.